Hello, and welcome to today's SPY preview. We do a daily analysis of the S&P 500 ETF, so please make sure you check back because this is kind of an ongoing narrative. If you follow it every day, you get a better sense of what to do. And please sign up for our YouTube channel here and give us some likes because we are trying to grow, and I'm dedicated to helping newer traders learn what to do, or older traders who have not been very successful. So understanding trading is a big part of it is understanding the whole concept of price levels, right? Some price levels are more important than others. That's just the way it is. It's pretty much the case in any financial market. So for some reason, the S&P likes this 390 level. It was support back here, then it converted to resistance here. So this is almost a year ago. So why would support turn into resistance? Well, we have buyer's remorse, right? There's people who bought who regret doing so when the price goes lower, and they tell themselves they made a mistake, and if they can get out at break even, they're going to. So when the price gets back up to where they bought, they place their sell orders. So if you have enough remorseful buyers placing sell orders at a level that was support, we convert from support into resistance. Here we see the opposite. We went from resistance in June to support in July and support in September. This is seller's remorse. People sell and the price goes higher. A lot of the investors tell themselves, I made a mistake. I'm going to buy my shares back, but only if I can get them at the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it turns into support. So you can see this on a lot of charts, this whole concept of levels switching back and forth. Some price levels are important, some price levels are less important, but these important price levels, they can stay intact for a long time. As you can see, 390 has been important going back almost a year now. So going back, 11 months or 10 months? So support here converts back into resistance, switches back to support, support here. So you see what I mean. You can see this 408 level was important too, right? It was resistance and then it became support. Seller's remorse, people sold, they regret doing so when the price moves up. They place their buy orders at the price that they had sold at. And if there's enough buy orders, it becomes support like it did here. Now, as you can see, we're pretty much right up against this 390 level. And this is an important level. So I would be surprised if we were to trade right through it. If we are going to go higher, I think that it'll probably take a little bit of time to work away at this resistance. But we're going to have some clues. Now, it's important to understand that the S&P is the sum of its parts. And the parts are, well, the top parts or the biggest parts are the sectors. There's 11 sectors, and sometimes different sectors are in the driver's seat. Sometimes it's more important to pay attention to a certain sector than others. Case in point, what's been driving the market over the last few days is the financial sector because of this whole bank meltdown. So it seems to me like the path of least resistance is lower. But we don't really guess. We let the market tell us what to do. And if we break this 390 level, if we break the resistance, there's a good chance we make a tradable move higher. Now, resistance, as you know, or maybe you don't, I should explain it. Resistance is a large group of investors who are trying to sell at or close to the same level, in this case, 390. If the price gets above that, it tells us that the investors who created the resistance with their sell orders have left the market. They're either canceled them or maybe they finished them. But regardless, anytime you take supply out of a market or selling, it sets the stage for the demand side or the buyers to have to push things higher. Because if the sellers are out of the market, well, if the buyers come in, who are they going to buy from? So in order to buy, they have to be willing to pay higher prices to entice the sellers to come off the sidelines. Now, the two biggest sectors are technology and healthcare. This is the ETF XLK that tracks the technology sector. And as we could see, we're sitting right here against resistance, literally like right on it. So we had resistance back here, resistance here, converted into support because of seller's remorse. Now support has converted back into resistance because of buyer's remorse. And we can see that happen down here. Resistance becomes support. I mean, you can see it on almost any chart. So if this doesn't get through over the next couple of days or two, there's a good chance we get a pretty meaningful sell-off. Now notice how when something gets to a resistance level, in these cases we have these rapid sell-offs. Now why does this happen? Well, investors who are trying to sell get the sense that there are other sellers around. That's why the price stopped moving higher. And they start to get antsy and anxious, some of them, and they think like, gee, I might not be able to make a sale. I better reduce my price, because if I'm not the lowest price in town, anyone who's going to buy is going to go to whoever does have the lowest price in town. So someone might say, all right, I'm going to drop from 139 to 140. 139.50, right? 139.50 cents to 139.40 cents. Someone else might see that and say, I'm going to 30 cents. Someone else sees that and says, I'm going to 20 cents. So forth and so on. And you get this snowball effect. The same thing happens with support, but it's the opposite. Support is a large group of buyers looking to pay the same price or close to the same price. And they start to get anxious because they sense there are other buyers around. That's why the market stopped going lower. And then they start to say, if I'm not the highest bid price in town, the seller's going to go to whoever it is. So I'm going to go from 130 up to 130 and 10 cents. Someone else sees that and they say, all right, well, I better get ahead of this person. I'm going to go to 130 and 15 cents. And you get this snowball effect. So that's why it's really important to know where these price levels are, because things make big moves usually when they get to them. They either break through or reverse. So trading around the levels is a pretty common trading style on Wall Street. All right, now the second biggest sector, well, tech is about 28% of the market. The second biggest sector is healthcare. And this is the ETF that tracks healthcare, XLV. And we can see the same situation. We're testing resistance. You got right up to there, right around this 127 level. So resistance back here became support here, and it became resistance. So the keys to the market, or the keys to the SPY over the next few days, is watching this healthcare sector and watching this technology sector. Because if we don't break through this resistance over the next few days, there's a good chance that we go into some kind of a meaningful sell-off. I mean, I'm not saying the market's going to crash or anything like that, but it'll be a move that's tradable. So if you're an options trader, you can look at some puts. If you don't trade options, you can look at some of the inverse ETFs that I talk about. So that's it for today, folks. Please sign up for our YouTube channel here, and please visit our website, stockmarketjobber.com. Give us some likes, and I will talk to you soon. Thank you, everybody.